All
Ilan, welcome to the show, man.
right. Good to be here.
I appreciate you coming, man. Well, actually, I've only had one person outside of real estate on the show. Everyone else is in real estate. But I also think of your industry, insurance, should be part of the industry because I think that protecting people's assets is a huge thing.
Yeah.
We were talking before, and I got first introduced to insurance when my wife found out she was pregnant. And then someone came to me and was like, hey, you guys got insurance, right? Like, what happens if something happens to you? Because you both need your money to run your household. And so if something happens to you, Greg, what is she going to do? That's a lot of stress. And I'm like, wow, okay. So then I had to seek out somebody who did that. They referred me to somebody. And then we got like a term policy, which I didn't know anything at the time of all the stuff that you guys know. Mm-hmm. And it was like super cheap, but it was something where I just had that peace of mind that if something was to happen, that she was going to get taken care of, right?
Yeah.
So, and I know that's kind of a loose thing, but I think we do these mortgages for people, and whether it's one person has the income that supports the house, but what happens if the income producer, something happens?
Yeah, it's a morbid topic. You don't want to think about what happens when I'm not there. But let's face it, one day we're all going to pass, whether that's when we're old, how we would like it, or if it's through an accident, God forbid something tragic happens. We need to be prepared for that. And a lot of people, they don't like to think about it, or they can't think about it, or they feel like they're too busy to think about it. Unfortunately, I've seen situations where they weren't insured, and they have to, the other spouse has to liquidate an asset, start a GoFundMe. Financially, it's not a good place to be in when, especially the main income producer of the house passes away. They can't produce that income. I mean, that's your number one asset. A lot of people talk about your home is your biggest asset, your whatever, but really it's your ability to produce income.
That is true.
If you can't produce income, what do you have?
I can't keep my biggest asset.
Especially during such a sad time of losing your loved one. When it comes to that situation, you don't want to have to worry about financials.
Yeah.
So insurance is huge.
Yeah, and you look back in that situation, they wouldn't regret getting the policy.
Yeah.
Right?
Yeah.
And what's interesting is as I started to learn more about the policies later, you could actually have it as protection, but also gaining wealth in it and use that. I'd love for you to talk about that because I can't because I'm not licensed in that area. But that there was a way that I could have the policy kind of like car insurance. Mm-hmm. So I'll use my terminology. Like a term policy was like car insurance. I'm just paying it, and if I get in an accident, I use it. But where these other policies, and whether it was the whole or the annuities, and you can clean up my language, but that there was a portion of my payment every month that was actually growing, and I could use it, and then I could use that money, which I use that money 3 different houses. I've used that money to use as my down payment on a house. Yeah, so not only was I protecting one asset, I was using it to buy another asset.
Yeah.
Is that the right way to put it?
Yeah, it's true. The whole investment side of things, a lot of people don't even know about that. Life insurance can be used as an investment. There's different kinds of policies. Obviously, there's the term where, like you said, it's like a car insurance where you put in the money and then, if you're not dead, then you can't really use it. But then there's the whole life policies, the index universal life policies where every dollar you put in there, not only is it going to the insurance side of things, but it's also building an investment account, kind of like a savings account, just working in the background. You don't even need to think about it. You pay your premiums and you check years down the road and you see it's growing.
I was shocked.
Yeah.
Like it was literally 5 years later and I'm like, wow. And then we were going to go buy a house. I'm like, I have the whole down payment sitting right there. Yeah. I didn't need to do a 401k loan. I didn't have to save up any more money. I didn't need down payment assistance. Like it was like, I just had that access right there.
Yeah. Yeah, it's huge.
Great vehicle.
Yeah.
So let me ask, how did you even get in this game? Like, what were you doing right before?
So I've always been the entrepreneurial type. I've just explored many different sales. I was started with solar sales. So I was that guy that, rings the doorbell, knocks on your door.
Door to door.
Yeah. I'm like, hey, your power bill, whatever. I was that guy. Eventually I transitioned into doing insurance, not life insurance, but I was doing property and casualty.
Okay.
So I was working with Farmers Insurance as a captive agent. I hung up my license there. I worked there for some time until I found out the opportunity of, on more entrepreneurial route, how I am. When I was doing the car insurance and house insurance, it was more of like almost like a 9-to-5 corporate kind of style. And when I got into the life insurance space, it was very much do your own thing. You get paid how much you work. And that was a lot more of my alley. My brother Ari, he's also very entrepreneurial, so I took after that, and
it's like in the family.
Yeah, yeah. So I just started selling life insurance, and honestly, it felt like I was making a much bigger impact. I was helping more people. Obviously, I was getting paid more while doing it. I had more flexibility in my schedule, and that's just where I'm at right now.
That's awesome. And who's like, I want to say like who's your ideal client, but who's your ideal client? Like who do you prospect after? Who are you calling on?
I can sell from anyone from someone who was just born, just had a social security, to someone up until they're 85 years old, 89 actually. I really don't have an ideal client. Anyone is good. I can help anyone. Doesn't matter your age, your income. There's a policy for everyone.
Wow. Okay. Now you were saying we're talking about this 89-year-old, right? So we were just talking about the like living benefit. So what happens if you're like heart attack and I'm incapacitated somehow, but I'm not able to generate income?
Yeah.
There's policies for that too.
Exactly. So a lot of people don't know life insurance, a lot of kind of policies, especially the ones that I sell, they have what's called living benefits. So, I'll preface this with a story. I had a coworker, and he got his mother a policy, healthy woman, but he just decided, let me just get her a policy just in case. A year go by, I think it was a year and 2 months to be exact, and out of nowhere, she has a heart attack.
Wow.
Boom. Like that, sent to the hospital, rushing, family calling, everyone's there, and she's out of job, like she can't work for weeks, months, she's in the hospital bills occur. And what happened was they were able to call the insurance company and actually make a claim on the life insurance policy, even though she was alive, because they had the living benefits on the policy. So they were able to get that to cover her income while she was not working, to cover the home expenses. Obviously she has to make her payments, pay the bills, and even cover the hospital bills.
Wow.
So because they had that insurance policy with living benefits, didn't even think they would need to access it. They got it for the life aspect.
Right.
But it had the living benefits, and that was a lifesaver. Yeah.
Yeah. It's kind of like adding up. Like I look at the cash value that people accumulate in there that I was saying I could use for the house. Well, later on, you might use it for assisted living and some of that long-term care, like end-of-life care.
Yeah.
Right. Is there a strategy around that that's maybe different than that?
Everyone has their own needs for it. You could, like you said, use it for an investment, for down payment, use it to revamp the garage, whatever you need to do. Some people like to take it out sooner. I would say, the longer you can keep it in, the better, because it compounds like a typical investment account. And yeah, it's just a great investment to have. Living benefits, life protection, all around. It's a wonderful product that I genuinely believe in.
Okay, good. So what do you think about when people object to, like, and say, nah, it's not for me? Like, what's typically some of the reasons why they don't go with getting insurance when you're talking to them?
Well, there's all kinds of reasons people can come up with. Most of them just aren't true. Usually it's like, oh, I don't need it. I have investments already. I could liquidate that. But would you want to liquidate that? I ask that a lot, and they're like, well, no, not really.
Yeah, I need to keep it in the market and let it grow.
Yeah. Oh, investments. Oh, I'm not married. Why do I need it now? I don't have kids. Like,
what's the answer for that? Someone's like solo.
I have a bunch of answers. One, obviously, hey, you're young, get it now, or else the price does go up as you age. Of course, the younger you are, the cheaper the premiums are going to be. Obviously, another answer would be start now, so you can start putting in those investments, and within 10 years, your money will double. Another 10 years, it doubles again. Like you said, don't delay the double.
Right.
Start doubling sooner.
Yeah.
So as soon as
you're right. The earlier they start, in the policies, they're less expensive. If any health condition was to pop up later, you already have your insurance.
Yep.
Right. And the sooner I get in and start allocating some of those funds into that, like you said, like the IUL or the whole, the cash value, that investment portion of it, the more it grows, the faster it grows, and the quicker I get to the double.
Exactly.
Yeah.
Yeah.
Okay, good. Now, when it comes to housing, right? So for me, how do you calculate, is there a way to calculate how much insurance someone needs?
So typically I ask 3 questions. Number 1 would be, do you have a mortgage? If so, what's the balance remaining? Number 2 would be, what's your annual income? And then number 3 would be typically just to gauge what they're thinking is, how much do you think a funeral costs? So obviously we want to make sure you don't pass away with any debt. We want that paid off with the life insurance. Number 2, especially if you're the main breadwinner, you want your annual income covered for at least a year. Preferably, if we can get 2, 3, even more, then that's better.
Yeah.
And then number 3, funeral expenses. You don't want to have your family pay that. I mean, they're already dealing with a lot with your loss. You being gone. That's a lot of sorrow they're going through. You don't want to put on any financial burden on them. So those are the main questions.
That's well thought out. I like that. Do you ever have? I had someone once tell me, and they were kind of wealthy, that they were looking at the estate tax. Like, because when they pass, there's this huge estate tax that they're going to pay on how much they had as cash net worth, and they're like, they took out a policy that would cover the estate tax, and they knew that if they were paying, and the policy was pricey, like a couple grand a month, but he's like, yeah, but even a couple grand a month over 10 years was still far less for the payout that would cover the taxes that was going to come out of my holdings and come out of my family's pocket.
Yeah.
Right? So there's a lot of strategy I don't think people think about, because I never thought of that. And just like you said, for funeral expenses, that clicked in my head, like, yeah, and there's also expenses of like the estate tax and things like that, transferring of stuff that the family is going to get blindsided with.
Yeah, there's a lot of things people don't think about, unfortunately, until it's too late. So it's good to plan ahead and, think of that stuff before it becomes a problem for your family. It's just good to have all around, for any reason, whether you want to cover the mortgage, funeral expenses, estate tax, annual income, or just you want your kids to go on vacation after you pass. I've had someone tell me, like, yeah, I just want this so my kids can have fun after I'm gone. I'm like,
a celebration of life.
Yeah, say less.
Yeah,
okay,
that should be in there. Yeah, it's like, I've seen that in people's. I've had people tell me, I haven't seen it in their wills, but they've told me they put it in their wills. Like, hey, I allotted a certain amount of money for the funeral, but for them to spread my ashes somewhere else, like, let's go to Hawaii, let's go spread ashes there. That it was like the trip was paid for in there, so it was a true celebration of life.
Yeah,
right.
Nothing wrong with that.
No, and I think it's well thought out. But again, they allocate the money however they did it, whether they already had it and they're going to put it over here, or it's part of their policy. But it's all part of that whole will, trust, insurance circle that they need with all of their wealth, right? Yep. It's like a full encompassing. It's like having a healthy household, right? So what other stuff would you want to discuss or cover when it comes to insurance, or that people should know that they don't know or don't ask?
A lot of people think it's too expensive. It's not. It's really inexpensive, especially if you're, below the age of 60. I mean, really any age. I mean, when you think about it expense-wise, you're paying for something, you're delaying the payment. Instead of paying it for in the future, when you pass, you're paying for it now. You're paying for peace of mind. It's not like a typical product. Like, you're not going to Costco and stocking up on water bottles. You're paying for something that's beyond that, which you can't even conceptualize now, but it will have a bigger return on investment than most people even imagine.
That's a good point.
Yeah.
And you can always, I say change, but adjust your policies, right? So I get in, and I've had policies where they at certain times I can reallocate and maybe bump the policy up a little bit, or I can allocate more towards the protection or more towards the investment, right? I can change it.
Of course.
Yeah. Okay.
You can always add, if you want, you can have $50 of your premium go into the investment, and then down the line, let's say you get a raise or whatever the case is, you get a bonus, you can make it 100, 150, 200. That's always adjustable.
Yeah. Okay. All right, some parting words of advice for our listeners.
Parting words of advice, I would say.
Does it cost to have a consult?
No.
Like, I can call you and say, hey, can we go over this? And if I sent you my mortgage statement and told you what I made every year and what my goals are. And hey, real quick, I want to take a time out and say thank you for paying attention. Thanks for listening to the podcast. And Ed, can I ask you a favor? Can you please share the content with other people so we can really grow this thing? This has been a passion project of mine. Really enjoying these interviews. I hope you are too. Please click the share button.
We can get that done in 20 minutes or less.
Okay.
Yeah. And obviously I don't charge for that.
Okay, good.
Yeah. That's free and secluded.
Well, gosh, I mean, I think the mortgage protection is huge for me when I think about it. I also like that there's a protection plus you increase your investment. I think it always hurts not to know things, right? Like wow, I wish I had known that. Like, how many times have you said that or heard that? Like, I wish I knew that before. I wish I had knew about that thing.
Yep.
And in the, gosh, just the extremeness of someone actually passing away, to go, gosh, I wish we had taken that free opportunity to talk to that person and learn more about that. And even if the answer is like, oh, it's still not for me, at least I got an education about it. At least I learned about what was available to me and go, yeah, that really is too much of a stretch though. So maybe, maybe down the road I can do it, right? But I'm sure you and your office have plenty of stories of the people that said that, and then 6 months later something happened to them, and you're like, oh man. I mean, gosh, we had a friend that lost their husband, and their policy was like set on auto pay from the bank. And like in my bank, when I set up an auto pay, you can put the expiration to stop or never stop. Well, there was a stop on there that they just didn't know. And so in March, it just stopped. And this happened later on in the year. And so obviously the insurance company didn't have to honor the payout. Yeah. So they actually had the insurance like going, like they wanted it, and it just went away. Now, fortunately, the other spouse was working and doing well, and so they were able to pick it up. But gosh, to have to like go, like you said, go right back to work and handling the kids and not really have the ability and the time to grieve properly. Like, this is what you're literally setting up, that opportunity to just have a little less stress. It's still traumatic. It's just less traumatic when I don't have to deal with all the paperwork and the finances and how am I going to afford this and how am I going to do it. And they were the breadwinner. And
yeah, I would say this, you've worked so hard to produce this lifestyle for your family. Don't let one accident, one tragic mistake, one slip up on the road take that away from them. You could have that pillow for them when they need it just by getting a life insurance policy. That will solve the problem. You've worked so hard for them to have this lifestyle. Let them keep it even after you're gone.
And it's less expensive than you think.
Yeah.
Yeah. Okay. What's the best way for people to get a hold of you?
You can reach me at, my phone number is probably the best, easiest way. Call or text. That's going to be 602-736-7337.
Cool. And we'll put all that information down here. Look, I always say, like, book a consult. Like, it's the easiest way. 20-minute conversation, see if there's a benefit, work up some scenarios for them, just like we do for the loan products. And then if at the end it doesn't work out, it's okay. At least you got an education. Yeah, at least you know.
Yeah, at least you know how much it costs. You might be thinking, oh, it'll be too expensive. It doesn't hurt to find out.
Dude, my policy was like, and I think it was, one of ours was cheaper. It was probably hers because she was younger. So it was like $79 and then $85, like $85 a month, and it was like $500,000 or $750,000 of coverage. So obviously nothing happened to me. But then later on, I learned about that. Hey, I can make this more of an investment, because I honestly thought, I'm like, this is like car insurance. Like, yeah, you don't need it till you need it. So I did need it, but it was just like, But I really come to terms now where I'm like, I'm happy to pay it because it's adding more to my cash value that I can borrow to do something with later. Yeah. Right? It's just another form of saving money and investing and growing.
True. Yeah,
well, cool, man.
That's so underlooked. Yeah. And if anything, obviously, people who've worked with you, they have a mortgage that they're trying to pay off now, right? So get it to protect the mortgage. You don't want that $300,000, $500,000, $600,000 loan to fall on your family. Just get a mortgage protection policy. So when you pass away, the policy can pay off the mortgage.
Dude, I like the cover the mortgage, cover a year minimum, if not two of your income.
At least
wipe
minimum
out all your
payments,
debt. I mean, it's just, again, you're going to grieve no matter what. You're just going to have less stress while you're grieving when you don't have to make a mortgage payment. You don't have your car's paid off. Credit cards are wiped out. Kids' college funds are funded. Like, I like the planning of, there's just a base level of protection, and then you can add a little bit more. Like, let's put the kids through college. Let's have a little, cushion for you. Let's not have to work for 5 years. And run through those scenarios.
Something I'd like to add, I'm sure on the investment side of things, you actually can't lose money on the policies. Did you know that? So it doesn't have, it has a floor. So the market goes up, you make more money, and it compounds. And then let's say the market goes down, you won't lose cash value. So what I would recommend a lot of people is get it for your kids as early as 1 year old, when they're born. You can get an index universal life policy for them. Start paying at least $50 a month, $100 a month, $200, however much you comfortably can, And when they're 18, they'll thank you for it, or whatever the case is. It doesn't hurt to
they will thank you for it. Yeah, because they'll get a lot of doubles in there.
Yeah.
That's awesome, man. Well, hey, I really appreciate you coming on. It's been really fun.
Thanks for having me, Greg.
Yeah, thank you. Congrats for making it to the end. You're part of the 1%ers, the 1%ers that actually finish podcast. Now I'm just going to ask a favor. Who else would you like to see on here? What other content would you like to see? What kind of questions you want me to be asking? What would you like to see in future podcast episodes? Drop a comment down below or shoot me a message on whatever platform you're seeing this on.